Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, March 24th, 2021. Quick recap on what happened today. We had pretty much a nice reversal or nice down day in the Qs. QQQ, the Nasdaq 100, is covered in the video earlier today. Although we didn't really have like much resistance here, we did on most of the FANG stocks, and that's why I do a lot of the coverage there. Apple's still below resistance. Microsoft just yesterday rejected off that 240.23 resistance. It backfilled this gap right here. That backfilled that gap and then managed to close same day, close back down at the bottom of the gap, so up to the top. So that's two gap backfills and that back down below there. That should take us down to the bottom of that recent range, and again, so forth and so on. So that's the story on the big market-leading tech stocks. They were catching a bid for the last few days, but again, they're still off their highs and still in what appears to be correction mode. And I've already covered these quite a bit, so you know the levels that we need to see taken out. There's Facebook, impulsive rejection off the top of the big trading range. Again, that's this boxed-in area. There, that little whipsaw there. Tried to pop it, and so far coming back down. So all in all, nothing uber bearish, but it is a rejection off resistance on a lot of these, again, big stocks. And then some still above support, like Alphabet. We need to see, that's the story on all of these. These support levels below. In some cases, it's the recent lows. In other cases, you have multiple lows, like Alphabet here, very well defined. That's the top of this gap right here. They gapped up. And then back testing for weeks now, actually over a month. And then just below that, yeah, that key uptrend line. So it's still the way I think we're going. And as the longer even some of these big stocks that haven't yet broken down, like Alphabet, the longer they move sideways after you've been going up, what that does, it turns the momentum indicators down. And so what it's doing on the more significant weekly chart, you now have a pending bearish PPO crossover. And should we go down any more and you break that support on Alphabet, let's say, you're going to get a high-level bearish PPO crossover. Here's the last high-level bearish PPO crossover there. It looked like we were going to get it, but it didn't. The lines kissed, and the PPO remained above. This was just a mid-level, so that's a high-level bearish PPO crossover. Boom. There's a high-level bearish PPO crossover. Right here was one. We didn't go down much, but we didn't go up. We went down to sideways for months, and so that's something else to note there. And then, of course, you have even then a very significant uptrend line, which would most likely bring in more selling for stocks like Alphabet in this case. Tesla, same story. We've already broken down on Tesla on the weekly chart, and we're still in what appears to be a consolidation period within correction mode, maybe a bearish pennant there. And that should take us down and still maintain that first and minimum target of 463.60-ish, give or take, and potentially some of these others if things get ugly. We'll see. All right, so that's the market. Well, not the whole market. Let's look at the small caps. That one's what stands out to me. That's where I've been pressing a little harder on as far as the indexes go. And well, there's a weekly chart. You can see. Look at that trend line break. Pretty impulsive move down so far. Bearish, high-level bearish PPO crossover. Small caps were insanely overbought, and I think they still have more downside to come, as I said, at minimum to that 205 target and intersecting primary uptrend line off the March lows right there. So a little more downside before we hit support. At which case, that would provide, if you've been short the small caps, an objective area to cover. Now, keep in mind, there's a lot of, case can be made on the longer term charts that we could see more than just a pullback to that level there. So should it break, and should you have a solid daily close, especially a weekly close below that trend line, and depending on what the large cap stocks are doing at the time, that could open the door for a much bigger move down in the small caps. In fact, my next target, potential target at this time, is about 170. That'd be a big drop should we get there. But first things first. Let's see how IWM acts. If and when we get to that 205 level, it's only about another 3% below from where we closed today. And speaking of the small caps, follow up from the video earlier today. Let me queue up my RTY chart here. This is where we were this morning in the video. Let me turn on from candlesticks, go to these bars. They show a little cleaner, I think, in the video. That was it. So as I said, this was the first objective level to close longs that you took at T2 for the bounce. And this is textbook technical analysis. We were right there, and that was an objective level to close longs and or go short. And look at that impulsive rejection. So traders are watching these levels. That was a trend line which was pretty valid before, but even more valid now. We have another check mark, meaning another reaction there, and that's where we went. Now, although I do expect more downside, like I just told you, in IWM, let me just show you a development here to note on the small cap futures, RTY. You have potential divergence, and it's not confirmed. PPO is still heading lower and could continue lower and take those divergences out. But should we reverse, that would give us bullish divergence. If that's the case, then you still have this trend line and a lot of these overhead former support, now resistance levels to contend with. But yeah, it's still what I think will happen. We'll probably get that other 3% or so down at minimum, and then maybe we'll have that divergence in place. And if we do, that might set the stage for an even bigger rally. And if it gets taken out, then that's not going to be bullish, obviously. Crude, really no update from crude since this morning. As mentioned, we hit that 57.25 target, which came into play after T2 was taken out, ran down there, and then did put in positive divergence. Nice snapback rally to park it right on that 61-ish resistance today. That's where we rallied to. And again, I think I mentioned this morning, it's objective to short here, up to here, really not beyond this point. Ideally, I want to see crude remain below that line, but it could certainly turn down here. Hard to go, all in short or all in bearish after you've put in a 60-minute positive divergence on the 60-minute chart, meaning we could have more upside. I'm leaning towards this. Divergences aren't the be-all, end-all, and what happens sometimes, here, let me show you. Let me drag this out. These positive divergences may play out. I mean, they've already played out for a decent bounce, but you could see a scenario like this. I'll get to my 120-minute chart in a second and show you the next target, but we could get another jog down here, continue to extend the divergence like this, and then put in a divergent low, an even bigger divergent low at the next potential target. So should we reverse here? And I'm leaning that way because I'm leaning to downside in the market. It's unlikely. Possible, but unlikely you're going to see, another 3, 5, or maybe 8% or so more downside in the market. Remember, my large caps and small caps, I have more downside. Unlikely you're going to see that happen in the stock market and crude go the other way. Crude will usually trade in line with the stock market. Not always, but again, often. And so if that happens, we need to go out here, go to the six month chart. 2-hour candles, and that brings into play these potential targets I have down here. The next one being 53.84, give or take, cover a little bit above that, down to about 51.81. It's we'll call that T4 zone, really is what it is. It's a pretty wide zone, but it's two support levels that come into play right here, and you can see all those reactions. So we had that little trading range right there, multi-month trading range, at least a month long or so. And again, that would be if these lows are taken out, and I'm leaning that way. I am leaning that way. I don't know if the divergences will still be in place, but they could be. So we'll see. We'll just have to see if and when we get there. And if you did go long crude and you want to stay long, maybe that's it for the correction. You can now at this point just periodically raise your stops. I think at the very least, if you went long at when that T3 level was hit, or T3 zone, at the very least, I think it's prudent to, or actually it was a hard level, I'm sorry, not a zone, 57.25. It'd be prudent to raise stops to your entry point, if not higher, and I think higher at this point. We've had a nice rally off there. Raise stops somewhere up here at about 58.85 if you want to give it room to run, if you believe that crude may head on to new highs and beyond from here. And that's it. Let's wrap it up here. Not much to update on the other things that I've been highlighting recently, including natural gas, wheat, some of those other ag commodities, because they're all about where they were earlier today when I did the last update. So I just wanted to, get an end-of-day update out there on what happened in the stock market today and what to look for going forward. And Yeah, I'm still leaning that way, but like I said, you have to respect the fact that we've had crude oil hit support and bounce so far and all that. So again, I'm leaning short, but wouldn't go too heavy. And I'm also trading. I like to trade diversified. Some things long, some things short, and and then micromanage those trades accordingly, reducing short exposure when price targets are hit, especially when you have positive divergence and or reversing those long to short, and gaming the zigs and zags. That's what swing trading is all about. All right, we'll wrap it up here, and if we see anything big in the morning, with the futures, I'll get something out. Otherwise, we'll wait and see how the market trades once it opens at 9:30. Give it a little, half hour or so to see where things go, and then I'll post an update then. This has been Randy Finney with Right Side of the Chart. Have a great day.